Hi, good afternoon, good evening, everybody, and a big welcome to all of you in our webinar series for SBL, day number 2. So, yesterday was day number 1, right? And yesterday we talked about introduction to SBL. Then I taught you all the formats. Then we learned the 5 professional skills. And the most important segment from yesterday was the exam techniques. So, those of you who had missed out on yesterday's class, the recording will be available probably tomorrow because today is off for the technical team, being Sunday. So, please do watch these 3 things, which is very important from your exam point of view. Now, today we will talk some tips about from the global prize winners. Then I'll talk about technical articles. But the most important segment for today is drafting practice. And the topic which I have selected for today is financial projections. It is a topic which most students are confused with or they don't know how to handle. So I thought to teach you financial projections, how to analyze it. And then we'll share the list of important topics and your study plan for September attempt. How to ask question, guys? Same as yesterday. You can only ask questions through the chat box, but you need to make sure that you only ask questions which relates to the topic under discussion. Any general questions I will take in the end, right? My quick introduction, which I had already covered yesterday, but for benefit of those who are joining today, this is the most important thing. My WhatsApp number, if you have any questions, any doubt, you can message me anytime. Now let's start with the tips from global prize winners. So I have 3 students who are global prize winners in from my previous batches. Okay. And I then took their interview to understand what they actually did differently from other students so that they were able to score 92 marks, right? Guys, just a minute. Someone is at the door. Sorry, guys. So I basically wanted to understand from these Superman and Superwoman what was their strategy for the preparation stage, how they had prepared for SBL. So I'll just talk about the red ones because these are important. So the global prize winners, all of them said that during the last 4 weeks, they focused on revising important topics only and not the entire syllabus. So we know that, right? That in the last 4 weeks, you need to consolidate your knowledge and just focus on the top 25. Then give at least 4 hours each day. All of them gave at least 4 hours each day. All of them were working student, right? So they used to do is they used to study 2 hours in the morning before going to office, and then 2 hours in the night after coming from office. One of them used to study 1 hour during the lunch break in the office. So you can see their level of commitment that they had to give 4 hours each day. So please, all of you, you need to also prioritize. If you cannot sit in one go, that's okay. Break it into 2 or 3 sections, but please give 4 hours every day. Then these guys said they focus 20% on theory and 80% on practice. So majority of their time in the last 1 month was doing practice. They were just revising the top 25 notes, but then the rest of the time they were doing drafting and practice and mocks. And then this one, they did at least 8 to 10 case studies or past papers, including 5 time-based mock on the CBE platform. So they were investing 80% of their time in doing past papers, so they were able to do 8 to 10 case studies. In fact, I remember two of them did at least 2 times or 3 times the same paper. So they did it once and they again did the entire again and again, at least 2 or 3 times. Then I asked them about examiner's answer. So they said, don't read examiner's answer. It is for educational purpose only, not practical under exam conditions. So don't worry about the examiner's answers. I have my own simplified drafting answer, which you can use to self-mark yourself or understand the concepts. And don't use books or kits or study hub. None of them touched the book. None of them touched the study hub or the revision kit. And this is not me, right? This is these students who scored 92 marks. And then I asked them that what did you do differently during the exam, those 3 hours and 15 minutes? So you remember we had discussed yesterday about exam techniques. So let's see if you are able to understand what these guys are saying. So they are saying that they attempted easy questions first, right? And then they use this word rigorous focus on time management. This is not my wording. Rigorous focus means being ruthless, being very strict on time management. And they did that. As soon as the time was up, they moved to the next question. And then they said technical knowledge is not important. They focused on application of the knowledge and they used information from the scenario to start their point. Opening sentence or punchline, which we discussed yesterday. During the paper, they thought like a CFO, and their answers were 2 lines, maximum 3 lines. I actually confirmed from all of them. Right? So I just thought I will share some secret recipe from the global prize winners. And all these points are from those guys. And all these points were common between all those 3 people. So if you want to look at my interview with these guys, right? So I've actually taken a formal discussion. The link is here, or you can also Google. It must be somewhere on the YouTube on VIFHE's channel. And it will be an eye opener for you. It will really, you can really pick up some nice things from these guys. Okay. So I would highly suggest that you, let me open it. Yeah. Watch this webinar. Was the second highest approach. You see, this guy scored 92. So they actually disclosed what they were doing. And then this guy from Malaysia. Right? All right. Done. Enough. I suggest that you watch this video. Okay. Right. Any questions so far? All right. The next topic for today is technical articles. So the good news is that there is no new technical articles so far for SBL. normally what happens is that when there is a new technical article, then that topic is tested in the next attempt. Mhm. And so there is no new technical article so far. There's a chance that they might publish something 1 week or 2 week before your exam. So then we will need to cover that. As far as the old articles are concerned, don't worry about them because they have already been tested. So it will not be repeated. I'm more concerned about any new technical article, right? So far, the latest technical article which is available was published in Feb 2025, like almost 5 months back, but nothing has been tested in March on that topic. All right. So what we can do is at least we can familiarize ourselves with the last published technical articles because before that all the earlier technical articles have already been tested. So do you want me to take you through this technical article? It's also there in my March webinar, but if you want, we can quickly go through the technical article, the latest one, but it's like 5 months old. All right, so the name of the latest article is Impact of New Technologies on Organizational Culture. It was published in Feb of this year. It's a very simple technical article. You don't need to read it. You can just go through my summary because I have summarized the key points for you to, so that it becomes easy for you. So let me tell you the background of this article. So this article actually talks about home working or remote working. Are you guys familiar what this means? What is the meaning of remote working or home working? What does it mean? Let me know. Can you please type what it means? Working from home. Yes, WFH, work from home. So you see, post-COVID, there was a huge trend of employees working from home. Now, is that good for the organization or bad for the organization? What do you think? Or can it be both? There can be some positive points and some negative points, right? And do you think work from home is good for employees? Again, good and bad. Good and bad. Don't say it depends. Of course, it depends. That's understood. But it has pros and cons both, right? Good. Now, this article talks about the impact of work from home on the organization and the employees. So, the first thing is always connected culture. So, when employees are working from home, the employees feel that they are always connected. So that's a drawback, right? Because when you're working from home and you are connected through your laptop, then the employer expects that you are always available, right? 24/7. So do you think it disturbs the work-life balance of employees when they are working from home? है ना? It can also create a stress because the employees feel that they are never able to disconnect. True. Because when you are physically working in an office, so once you step out of office, at least you are disconnected little bit. But once you are working from home, then you are expected to be available 24/7, right? So it's the employees, they feel a bit stressful, they find it difficult to disconnect, and it disturbs their work life balance. That's it. Then the second is monitoring of employees. So when so do you think that if my employees, they are all working from home, do I need to monitor them that actually they are really working or they are not working? I think right. I think it is the right of the organization, right? Because organization is paying salary to them to work from 8 to 4, 9 to 5, or whatever. So, because they are working from home, I cannot see them. I cannot see them, right? So, how can you monitor whether they are all working? So, then there are software tools which monitors their screen time and what they are doing. So, So when these organizations started monitoring, so you think you need to keep a balance between how much monitoring versus privacy? I mean, you cannot monitor them 24/7, right? Excessive excessive monitoring can lead to privacy issues. I mean, you can monitor them from 9 to 5, but not after that, right? Or whenever they sit on their system, but sometimes they can play games indoors, or I don't know. So it's a subjective area, it's an ethical discussion. How much monitoring is right? How can we strike a balance between the right amount of monitoring versus not affecting the privacy or personal life? है ना? So this is another challenge of work from home, that monitoring, uh, excessive monitoring can lead to stress, lack of trust. It can adversely demotivate the employees. Okay, so all organizations, they need to balance the level of monitoring so that it's not excessive. The third thing this article talk about the drawback is lack of face-to-face communication. So another drawback of work from home is that the colleagues, the employees, they don't meet face to face. I mean, a physical connection is also important to create that teamwork, to create that bonding. If everybody is working from home and they don't know who the people are, the bonding and the teamwork will not be there, right? So, this lack of face-to-face connection, how can organization address this issue? Any idea? If you are the CFO, how would you try to deal with the situation? So, video meetings, yes. So, one thing is that all the meetings should be on camera meeting, video meeting. So, at least if you're not meeting physically, but at least you can see, like right now, your video is off. but my video is on because I want you to connect with me, right? So video meeting or video calls is important. And then some organizations make it mandatory to come to office at least once a week. So I know some companies where their employees work 3 days from home and 2 days. Yeah, it's called an hybrid model. So sometimes that is mandatory to come physically to office once a week so that you can physically meet your colleagues and create that bonding and connection and networking and relationing. Hmm. Done. So this is the overall article, that because of this work from home culture, new challenges have arisen, right? Um, Staying connected 24/7, excessive monitoring, lack of face to face. So, organizations are now taking measures to balance these challenges and to handle these challenges. We are done. Any question on the technical article? So it's a very simple, common sense article, not nothing technical in it. Just talks about challenges of work from home and what can be done to fix it. All right. Now let's go to drafting practice, the main session for today. So the exam question topic is financial projections, and the question which I have selected is SBL March June 2023 paper called Nola Toys. Now this paper was available on your CBE platform, but recently they have removed this paper from your new CBE platform, because as the papers get older, they remove it and they replace it with later papers. So you might not be able to find this paper on the CBE platform. So what I've done is I have extracted from my old resources, and let me um, let me see where it is. Let me open the paper. Can you see this on your screen? Nola Toys March June. Okay, let me enlarge a bit. Okay. So let's read the requirement first. The requirement, there's a background, then technical requirement, followed by professional skills requirement, right? What is the background says? So Nola Toys. So Nola Toys is let me give you a quick background of this organization first so that you can understand the context. So Nola Toys is a toy manufacturer, as the name says. Okay, it's a toy manufacturer. They manufacture brick toys for children. And it is a very old company, and it is a number one company globally. They are very famous, and their Nola bricks is number one in the world. So very strong, successful toy manufacturing company. And then recently some other company has acquired Nola Toys. They have bought Nola Toys, and now they want to use the brand, because Nola Toys is a very strong brand, and they want to diversify into computer games. Clear? Now read the background. The board is considering diversifying. The board is considering diversifying into computer games based on Nola Bricks brand. That's the background. That Nola Bricks has a very strong brand, and the board now wants to move into computer games, online gaming using this brand. A business development executive has prepared some information on the computer games industry, while a finance assistant has provided a financial appraisal of the implications for Nola Toys of this diversification. The finance director has asked you to assist him in preparing for the board. Prepare a report for the finance director. So what is the format here? Which format required? Report format. Whom it will be addressed to? Not the CFO idiots, not the board idiots. It is very clearly mentioned here, prepare a report for the finance director. How stupid can you get? Straightforward, we have to address it to the finance director. So you need to stick to the wordings. A, critically assess the financial appraisal of entities move into the computer games industry prepared by the finance assistant, 14 marks. And professional marks are available for demonstrating skepticism skills in questioning the content of the financial appraisal, 4 marks. So what is the total marks? What is the total marks? 18. 14 plus 4, 18. How many points required for 18 marks? 18 divided by 2, 9 points. If we are not able to give 9 points, then minimum how many points are required? -1, 8 points. So we discussed all this yesterday, right? Now, what does it mean? Critically assess the financial appraisal. What is the meaning of this word? Critically assess. I taught you this word yesterday. Critically means it comes from the word criticize, and criticize means finding faults, negative points, mistakes, shortcomings, and the skepticism skill. So you see, they are kind of linked, right? Skepticism also means doubting something, challenging, questioning, not agreeing. So critically assessing means finding faults. Skepticism also means challenging. So they're kind of linked. Okay. And then the examiner has given you this financial projection, which has been prepared by a finance assistant. They have given some numbers and they have given some notes to explain these numbers. What is our job? Our job is to critically assess these calculations. Is the requirement clear? It is a very simple language. Requirement: critically assess the financial appraisal. Very straightforward. So we need to identify faults or mistakes. Are you guys ready to solve it? Okay, so let's make the format first, because before we start drafting, we have to make a format. So the format required is, what's the format required? Report. Eh? Okay. So on the top, we will write report. Then two, remember we covered the format from subject, date, introduction, and then the closure. Whom should we address to? Finance director. है ना? From, so in this scenario, our role was external consultant. Yeah. So you are external consultant. It was mentioned somewhere on the landing page, which we don't have right now. External consultant. So are we internal or external? So we will use a third party external tone while drafting. Subject. Subject can be, I'll just speak from the requirement, assess the financial appraisal, or I can assess financial appraisal, right? Date, I think date in this attempt was June 20x3. It was given on the landing page. Introduction, this report, and then I will copy paste from here critically. I'll just copy from here. C small. This report critically assesses the financial appraisal of entities move into computer game assistant. And then the closure. So my role is external consultant. So I will just write my role at the end. Our format is ready. Report to, from, subject, date, introduction, and then the closure. Now my drafting will be sandwiched between this area. Any questions so far on the format? Okay. Oh, go. Now, for financial appraisal, okay, for financial, whenever you get a data like this, I have prepared a checklist to help students analyze the information in a proper and structured manner so that you don't miss out anything. So I have a checklist for financial projections specifically. Would you like to see that? Hmm? Yeah, it's there in my top 25 as well. So whenever you get a question on financial appraisal or financial projections, always use my checklist. So where is that checklist? It's here. It's also there in my top 25. So you need to memorize this checklist. Otherwise, you will not be able to give a good answer. So the first thing we check whether discounted cash flow method is used. So for any long-term projections, long-term decision making, long-term financial appraisal, long-term means more than 1 year duration. It is mandatory to use discounted cash flow method, right? So the first thing, and actually this checklist I use in my role as a CFO. So I review a lot of financial proposals, financial projections. So I always refer to my checklist. So I'm sharing my personal checklist with you. So the first thing I check as a CFO when I'm reviewing a proposal or a projection, I check whether my idiot staff has used the discounted cash flow method, yes or no. If they have used the discounted cash flow method, well and good. If they have not used discounted cash flow approach, I will throw it back on their face. And I might even throw them out of the company. Right? So it's mandatory to use discounted cash flow. So that's the first thing I check. Then the second thing I check is whether the bottom line NPV or net present value is positive or not. Then I quickly check the payback. How much is the payback period? And I will teach you all these things. We will apply all these things in the scenario, but I'm just discussing the checklist first. Then I will check the projections and assumptions and see whether they are realistic. That's the key word. Whether they are realistic. Supposing if the future projections are not realistic, what will happen? Realistic means accurate. They make sense. They should not look stupid numbers. Realistic means, so if the projections are not realistic, the decision making can go wrong, right? Because it will give incorrect NPV. It will give an incorrect payback. If the numbers are wrong, of course, the ultimate calculations or outcome will be wrong and it will lead to wrong decision. And if it leads to wrong decision, then what happens? Supposing if it leads to a wrong decision, what will happen? We will incur huge losses, right? Then who is answerable to the shareholders? Because of you idiot CFOs, the company lost money. So CFO's role is very important to protect the company from losses, right? Hmm. And then I will check whether corporate tax has been considered or not, because all decision making is based on post tax profit. Because whenever we make profits, we have to pay taxes, right? So all decisions should be based on after tax results. And then I will check the basis of discount factor, because discounted cash flow, you have to use a discount factor. So I will see what is the discount factor which has been used, what is the basis of that, how we have arrived at discount factor calculations, and whether business risk. So all this is discount factor things. And in the last, I would also suggest to do a sensitivity analysis. What is a sensitivity analysis? It is kind of a what if scenarios. What if the revenues are lower by 10%? What if the costs go up by 10%? Right? So this is my standard personal checklist which I use in my company, and we will try to use this checklist on this question. Are you guys ready now? Can you review the projections just like a CFO now? Let's see your CFO skills. All right. So the first question checklist is check whether discounted cash flow method has been used. So how can you check whether they have used discounted cash flow? There are a couple of signals. Number one, there will be year zero, year one, year two. So there will be columns, year zero, year one, year two, year three. And then you will see the word discount factor or discount cash flow somewhere. And in the end, you will see the word net present value, NPV, right? So these are some indicators that discounted method has been used. So let's check. They have given year zero, year one, year two. Do you see discount factor anywhere? Yeah, it's mentioned here. Discount factor, discounted cash flow, and in the end, the ultimate outcome is NPV. So, what do you think? Have they used DCF method? Yes or no? Yes. So that's the first item of the checklist, that we make sure that they have used discounted fact, the DCF method. In one of the scenarios, in one of the past papers, the financial projection was given, but it was not based on discounted cash flow. You remember, my paid students, we did a Beetle co-fold construction where the uh, forecasted costs and revenues were given and it was not discounted, right? So we then identified it that it should be based on discounted cash flow, otherwise it will give a wrong decision. Yes, correct. So, but in this particular question, there is no doubt they have used the discounted cash flow method, so no need to comment. The second item is check whether the NPV is positive or negative. So what is the NPV here? Oh my God. Is it? Let me in the. Oh shit. It says minus 2.41. Whoa, whoa. It's negative. Negative NPV is good or bad? Of course, negative net present value, it should always be positive. Why is it bad? Give me a reason then, because you will have to explain it to the board, right? So it is negative, which means we will incur losses. It means that this project, this proposal, if we go for it, we will incur loss and it will reduce shareholders' return or shareholders' wealth. Don't talk about cash flow here, Joyce. Just follow my wordings. We will incur losses and it will reduce shareholders' return or shareholders' wealth. Yeah, it is a negative cash outflow. Yeah, I understand that. Okay. So there will be a net cash outflow. So it can lead to liquidity issues as well, right? Does it make sense? So because it is a net outflow, right? So it can also be a cash, it can lead to cash deficit. All right, good. Don't link with dividends. Don't overthink, please. Shareholders' return or shareholders' wealth is more than enough. So, how do we draft it now? That is your first point, right? So, we will say, what will be your statement of fact? The NPV is negative dollar, how much? 2.41 million. 2.41 million. That is your opening sentence or statement of fact, which we picked up from the exhibit. Remember, yesterday I told you always your point should start with reference to the exhibit, opening sentence or punchline. So this is from the exhibit that the NPV is negative 2.4 million. And now you need to just elaborate on it and talk about the impact. This shows that the proposal is not financially viable, as you will incur losses and this will reduce shareholders' wealth. Done. What heading would you like to give? Just pick up the heading from the punchline, negative NPV. Or you can just write NPV or negative NPV, up to you. What is the purpose of giving subheadings? So that the examiner can easily guess what you're going to talk about, right? So he has an idea what you're about to discuss. So this will get you some extra mark. Do you think this is a bit short? Okay. Can we elaborate a bit? This shows that the proposal is not financially viable. This will lead to cash outflows. Nola Toys will incur losses, and will reduce shareholders' wealth. Enough. It's more than enough. You can use the name of the company. You can use you can use a mix of both. Okay. This shows that the proposal is not financially viable. Why? Because this will lead to cash outflows, comma, Nola Toys will incur losses, and this will reduce shareholders' wealth or shareholders' return or returns. Enough. Done, guys? Okay. Now the third thing on the checklist is quickly calculate quick payback. So do you know the meaning of payback? What is the meaning of payback? Payback means how quickly you are able to recover your initial investment. Period of recovery of your initial investment. Are you able to recover your initial investment in 3 years or 4 years or 5 years or 6 years? So that is why we calculate payback to see how quick is the initial recovery. No, it's not ROI, Deepak. It's not ROI. ROI is return on investment. Payback will just tell you how quickly you are recovering or break even. Yeah, that's okay. So payback is in percentage or in years? Payback is in years, right? ROI is in percentage or years? ROI? Yes, return. ROI is always in percentage, but payback is always in years. Good. So let's check out. So last question on payback. Earlier the better or later the better? Higher, what is payback? Low number of years is better or high number of years? Earlier the better, right? Sooner the better. Sooner you are able to recover your initial investment, the better. So the sooner you recover, the lower the risk, right? If you recover your initial investment quickly, it kinds of reduces future risk, right? Because you're able to at least recover your initial investment. Later the payback, higher the risks of losing money. Earlier the payback, lower risks. Okay. Now let's check these guys. How do we calculate payback? So you will need to look at this line, net cash flows, just before the discount factor is applied. So I will calculate payback before the discount factor is applied, okay? Because we are just calculating simple payback, not discounted payback. That is much more complicated. So we will just use cash flows, net cash flows total. So our outflow was 22 million. Then we recovered how much in first year? 4 million. Then again we recovered 4 million. So total 8 million we recovered. Third year 4 million. So 8 plus 4, 12. 16. And then 8, 24. So it is almost 5 years, 4 years and 6, 7 months. है ना? So in order to recover 26, 22 million, we will be able to recover in year 5. So payback is in year 5 that you will break even or recover your initial investment. Wow. For almost, yeah. So normally the rule of thumb is payback, a good A good payback period is something which is less than 4 years. If it is less than 4 years, it's considered a reasonable payback. But if it is more than 4 years, then it is risky. In this case, it is almost 5 years, right? So now can we comment on it? Okay, what will be the statement of fact? Is that a correct statement of fact? Or you can say the payback period is, I don't know, 4.7 months. Oh, not months, years. Okay. So is that a correct statement of fact? So you don't have to show the calculations in SBL. You can quickly calculate mentally, or you can use a calculator. Okay. You don't have to show any calculations. So that's my opening sentence. The payback period of this proposal is 4.7 years. Now you need to elaborate on it. This is quite high. Or you can say this is unfavorable. This is unfavorable, right? As it will take substantial time to recover your initial investment, which increases the risks. Done. Yeah, it increases risks and uncertainty. I like that. What heading should we give? We can say payback, or if you want, you can say lengthy payback or long payback. Payback period is also fine. So, do you understand the approach? So, the approach is that I have picked up an opening sentence from the exhibit, like this one and then this one. And then I simply elaborated on its impact on the business, that how is it good? Is it bad? Why is it bad? How it's going to affect the business? Have you understood the technique of linking and drafting? Yes or no? Okay, done. Very good, guys. Very good. So, my paid students, you are already aware of this, right? We have done six proper questions, but I'm more worried about those students who have just joined now. So, please understand this approach. We will always try to pick up an opening sentence and then we will share our thoughts and our point and elaborate on it by talking about its impact. So can I say that SBL is all about identifying the punchline and then discussing the impact? Can I say that? So SBL is mainly about identifying the issues or the punchlines or statement of fact and then explaining the impact. Hmm. Now what next is on our checklist? So 1, 2, 3 we have done. Now we will see, check the projections and assumptions and see whether they are realistic. Ask for breakups and basis of assumptions. So now the important thing starts. Now, as a good CFO, you need to see whether these numbers, these projections, do they look realistic or not? Because if they are not realistic, it will lead to a wrong decision making. So let's talk about revenue first. Revenue in year one is 51.3 million. Year two is 51.3 million. What? Year three is 51.3. Year four is 51.3. Year five. Whoa! I think I will fire this guy. What do you think? How can the top line revenue be exactly same? Is that realistic? No, that's bullshit. If this was my employee, I would have fired him. Straightforward. So what's wrong in this? What's wrong in this? How can the revenue be exactly constant? Don't you think revenue should grow over the passage of time? It should grow, right? Revenue is supposed to grow. So in the initial years, your revenue will be low, but with the passage of time, if your product is good, your marketing is good, if the industry is growing, the revenue should grow, Baba. Now, in this scenario, in this case study, it was what is the industry we are talking about? No, this projection is for which industry? It's not for toys, it's for computer gaming industry, right? This projection is for what, idiots? You don't even know what this proposal is about. It's about investing in computer gaming industry, right? And somewhere in the scenario, it was mentioned that the computer gaming industry as a whole will double in next 3 years or 4 years. That the computer gaming industry is growing like crazy and it will double in 4 years. 25% growth each year. So, with this background in mind, that the computer gaming industry is growing significantly, does this revenue, our revenue is not growing? Don't you think that's a disconnect somewhere? Good. What will be your opening sentence here? So now we'll talk about this revenue. So what will be your opening sentence? Anita, opening sentence. I'm not talking about headings. What will be your opening sentence? No, Anita. What's wrong with you today? No, Umar. Why is it so complicated? I mean, you guys are overthinking or overcomplicating, I don't know what. The opening sentence is very simple. The revenue amounts are constant throughout the years. Don't you think you guys are dumb, more dumb today? Your opening sentence is that the revenue amounts are constant over the years. Why you are overcomplicating life for you? Very bad. How can I make you pass if you don't up your game? The revenue is constant. Uh, that's a statement of fact, right? This is how I will talk to the board. I will say the revenue is constant. Now elaborate on it. This seems quite unrealistic as revenue should grow with the passage of time. Why? Because the computer gaming industry is showing significant growth in future. Guys, please don't chat amongst yourself. Yes, Bidur, you can. Guys, can you now please type your complete answer and then paste it? What should be the heading? Constant revenue or no revenue growth? The heading will just give the examiner an idea what you are about to talk about, right? Okay, please draft the complete answer from heading till the end and paste it on the chat box. Okay. Now there is a note 1 as well, in which they have explained something. So this 51.3 million, what is the basis of this? You see, the basis is also very important, right? How they have calculated 51.3 million. Why it is 51.3? Why not 61.3 or 41.3? So there must be some formula or some assumptions behind this, right? So what is the assumption? This they are saying that this is based on average market share of other suppliers of computer games and the strength of our brand. Anticipated market share is 0.027%. So they have done some industry research. They have looked at similar size companies. What is their revenue? They have considered the contribution of our brand and how much market share are we assuming? Our market share is 0.027. Right. I have one issue here. They are keeping the market share constant for the next 5 years. Don't you think? It looks from here that our market share will remain 0.027% for the rest of the life. Isn't that unrealistic? If we have a very strong brand, a good product, I would expect our market share to grow, right? So, as a good CFO, would you also challenge the market share assumption? So, there are two things. Whenever we talk about revenue, there are two things. One is the industry growth, and one is our market share. Do you understand? When we talk about revenues, one is the industry growth, and one is our market share in that industry. So, both ideally, if the industry is growing, the industry will grow. But then I would also expect my market share to grow by better marketing, by beating my competitors. So I will get double benefit, right? I will benefit from the industry growth and I should also benefit from increase in market share. Do you understand? So in the first point, we spoke about industry growth, that the industry is growing. So even if our market share is constant, our revenue should increase, right? Because the industry is growing, the cake size is growing. So even if we assume our market share is constant, our revenue should grow. And in the second point, I will say that why our market share is not growing. Don't you think we should make efforts to increase our market share? After all, every business wants to grow, right? So we have to increase our market share. Can we draft? What will be your opening sentence? If you mess this time, I will throw you out of the class. What will be the statement of fact? You just pick up from the exhibit that the market share assumption used is 0.07% through the next 5 years. Tanish, please mention how much is the market share? 0.027. Give proper statistics. Done. What should be the heading? Market share. Yeah, you can also use a question. Should we use a questioning tone? Should we use a questioning tone? Some students say that questioning tone is not allowed, but sometimes, somewhere, you can use a questioning tone because skepticism includes challenging or questioning mind. Or we can say that I disagree. Yeah, I think that's more better. I disagree with this assumption, unrealistic assumption. What do you think? I disagree. Oh, what's happening with this unrealistic assumption? Because Nola Toys market share should increase based on its global brand or strong brand and marketing activities. Enough. So sometimes you can use word like I disagree. Sometimes you can say it is unrealistic. Sometimes you can ask a questioning tone like don't you think that it should grow? You can use a mix of strategies for different paragraphs. Yes, Deepak. Yes, Deepak. Arjun, yes, but you need to change the wording slightly. Yes, Nina, but separate paragraph. No talal. Yes, Abrima. It was mentioned somewhere in the other exhibit. All right, what else? Now it says contribution. What is the meaning of contribution? Contribution margin or contribution means the profit, the gross profit, sales minus variable cost. But in layman, you can think it's the profit after subtracting all the variable cost. Contribution higher the better or lower the better? Contribution higher the better or low? Of course, higher the better because it's kind of a profit. So what's happening here? Contribution is obviously the same because it is based on revenue, right? So if the revenue is, so what is note 2 saying? Note 2 is saying contribution is based on the average contribution to sales ratio of 5 computer game companies with revenue under. So it is based on the average industry profit margin. Okay. Do you understand that? So they have calculated the average industry profit margin or contribution margin and they have applied it on their revenue. So if the revenue is wrong, so if the revenue is unrealistic, obviously your contribution will also go wrong because contribution is a percentage of revenue. Do you understand that? So it's very clearly mentioned here that the contribution as is the ratio contribution to sales ratio. So this has been calculated as a percentage of sales. You see, gross profit margin is always based on revenue, right? So if your revenue is unrealistic or not growing or constant, then obviously the contribution is just a formula. It will also be constant, right? Now, there's one more thing as well. They have used the average contribution margin of 5 computer games industry. Correct? They have done the research and they have found that. Can anybody let me know what is the contribution margin percentage they have used? Can you calculate what is the actual percentage they have used? 12.83 divided by 5.3. 25%? Okay. So it seems like 25% is the average gross profit margin of five companies in the industry, right? But my question is, now I'm thinking like a CFO. Is it correct to use the industry average? I mean, it's okay. I mean, if they are our similar size, then I think it's okay. No? Why? And where will you find out the average? How would you calculate the? I Yes, who's this? Yes, Saloni, very good. The only problem, so I think if we are calculating the average contribution margin of five similar size companies, that's fine. They are similar size companies like us. But then what we need to keep in mind is we are new. We are about to start. We are a startup in this product. Those companies are already established, but we will be starting now from scratch. So, and also somewhere it was mentioned that Nola Toys pays above market salaries. Do you understand that? It was somewhere it was mentioned that Nola Toys pays above market salaries. So obviously, because so then it would be difficult to compare with these guys, right? It might not be apple to apple comparison. Why? Because number one, these companies are already established and we are a startup. Initial costs are higher. And also, our salaries, we pay above market salaries. So it might not be a realistic percentage. You see, this is how a CFO thinks. That it's all it's all a game of assumptions. Your assumptions need to be airtight. If your assumptions are wrong, your numbers will go wrong. Now, what will be your openings and trends for contribution? You can say that the contribution is based on average of five computer game companies. So you can also mention 25% because we calculated that, right? The contribution margin is 25%, which is based on average of five similar size companies. Now, is that a correct statement of fact? Any subjectivity? No, I just picked it up from the exhibit that the contribution margin is assumed to be 25%, which we just calculated, and which is based on average of five similar size companies. Now, what is our issue? What wording would you like to say? I disagree, or it looks unrealistic, or you want to questioning tone like don't you think? We can use variety, it's up to you. I think I'll show you the questioning tone. Don't you think that your contribution percentage should be lower or higher than others? Our contribution should be lower than others or higher? Lower, yes. Should be lower than others as you are just starting this product. Also, you are paying higher than market salaries. Should be lower than others as you are just launching this product and you are paying higher than market salaries. Easy, guys. Ahmad, don't complicate stuff. It's a variable thing, so it will go there. I just simplified the answer. I'm saying, don't you think that your contribution percentage should be lower because your costs will be higher than others as you are just launching this product and you are paying higher than market salaries. Is that okay? It provides more clarity that your costs will be higher. Hmm. Okay. What else is there? Then it says other cost, and again it's constant. You see, if you're, I'm pretty sure again, other cost is also based on your revenue. I can guess. I'm making a guess because this one is also constant. I'm sure this is also linked with revenue. What is the other cost? Note number 3. This is principally the marketing cost based on our current ratio to sales. Oh my God. Oh my God. This is a bunch of idiots. So other cost is marketing cost. Okay. What percentage? Can you let me know what percentage they have used? So 6.9 divided by 51.3. 13.5. Okay. 13 point, so they are assuming that 13.5% is the marketing cost. Now, I have two concerns here as a CFO. First of all, because it's a new product, don't you think that we will have to spend more on marketing in the initial years? It's always like that. Whenever we launch a new product, the marketing spend is significantly higher because we are introducing the product, we are spreading awareness. I'm sure you know this, right? This is basics. So, my first question here or challenge, I would challenge them that since it's a new product, the marketing spend should be higher in the initial few years. I'm not saying initial 1 year, 2 year, 3 years, it's subjective. I'm saying it should be higher in the initial years. Does it make sense? And my second concern is, it says this is principally marketing cost based on our current ratio to sales. So they have picked up their current marketing spend. So their current marketing cost is 13.5%. Is that a good assumption to use the current marketing ratio? Why? Why is it bad? Think, guys, think. Think like a CFO. What is our current product? It's a different industry. Our current product is toys. What is our current product? Toys. है ना? Current product is toys. We are already the market leader in toys. We already have a very strong brand in toys. How can we use that marketing ratio for a new product, for a new industry? Crazy. Yeah, different customer segment maybe. I don't know, but quite possible. So it's all a game of assumptions. Your assumptions need to be very accurate. We can use the marketing ratio of similar companies. Yeah, that can be a recommendation, right? But still, initial years should be high. No need for recommendation. We are just critically evaluating, right? Or analyzing. So we will not recommend something, we will just point out the errors. No, Sama, petty point. Okay, let's draft now. How many points we have so far? We have 1, 2, 3, 4, and 5 points. How many points are required? Remind me, please. How many points were required? 9? 9 points, but minimum 8 points. Yeah. No abuser. Very bad. Okay. So now let's talk about marketing. Can we give 2 paragraphs? Because we are picking up 2 issues here, right? We in marketing, we identify 2 concerns. Number one, the marketing spend should be higher in the initial years, correct? And the second point is that it should not be based on your existing ratio. So it's better to give 2 paragraphs so that the examiner can clearly see the 2 logics. Opening sentence. Is that a good opening sentence? The marketing cost is constant throughout. What's wrong? Throughout. Throughs. The throughout the 5 years. Correct? Now, what is our concern? This looks unrealistic, as, or you can say that, as Nola Toys is launching this product for the first time, the marketing costs should be higher in the initial years. Done. Jaisha, not the starting year, initial years. It can be higher for the second year as well, till we reach a reasonable market share. Or I can also write until you reach a reasonable market share or penetrate the market. Madura, no issue. These guys type this. Learn the drafting technique. You can say, I disagree with the assumption. Yeah, that's fine. 30 more seconds. Most of you are copying from my draft. So now try to draft on your own, right? You can get an idea, but try to think the wordings from your own mind. Now, the next point I want you to draft. So, what is the next point that they are the marketing cost is based on your current ratio to sales? That's your opening sentence, right? The marketing cost is based on your current ratio to sales. Now, draft now on your own. What is your concern here? What would you like to say on this? You can say that the current ratio to the current ratio, marketing ratio is based on toys. However, the computer game is another industry. So current marketing ratio is incorrect. Please draft. Don't ask too many questions, okay? One or two times you can use a questioning tone, but not in each and every paragraph. Use a variety of sentences. I disagree. It's inaccurate. It is inadequate, unrealistic. Variety. Huh? Don't use questioning tone in all the points. Type on your own now. Let me see. You can use word like it's inappropriate, inadequate. Done. Short and sweet. Since computer gaming is another industry, it is inappropriate to use the marketing ratio of toys industry. Good. So my paid batch students, you would know how to draft because we have done this practice. But the new students, I want you to really start drafting on your own so that you get the idea of it. Now tell me, I have a question. Marketing cost, we gave two paragraphs, right? One a big paragraph, one relatively small. So will these be considered as 1 point or 2 points? Yes, these are this, although it's the same heading, there are two paragraphs under same headings, but these will be considered as 2 points because we are picking two issues. Good. Now we have how many points? 1, 2, 3, 4, 5, 6, 7 points. Okay, what else is there? I'm tired now. Taxation. So, taxation, they have included taxation, right? And what is the note saying? Note number 4, it is saying taxation at a rate of 25% is paid on pre-tax cash flows. Okay. For taxation, as long as they have included or subtracted taxation, I am okay. I will not going to challenge it. Okay. So have they considered taxation? Yes or no? Yes. So then you don't need to comment anything. Saida, that's exactly what I'm saying, idiot. If they have considered taxation, then no need to comment anything. If they have not considered taxation, then we will say that tax needs to be considered because decision making is based on after tax profit. But if they have included taxation, then no need to comment anything. Jaya Kumar, don't you understand simple language? No need to comment anything. And then it says investment. Investment. It's an outflow of 22.6 million in year zero. And then there is a inflow of 3.6 million in year 5. Outflow, a significant outflow in year 0, followed by some inflow in year 5. So what is the note saying? Note number 5. This is based on average initial investment in non-current assets of 5 computer game companies. Okay, so again, they have done some industry research and they have, analyzed what kind of investment is needed. And then they have just taken the industry average and shown it as 22.6. Right now, I'm just talking about 2.6. So please ignore 3.6. So how they have calculated 2022.6? They have taken the average investment based on 5 similar size companies. That's fine. That is normally what we do as well, that we do industry benchmarking, industry research. But still, I have one question in my mind. What items are included in this? So it's a huge amount, right? 22.6 million is a huge amount, very material, very substantial. So, as a CFO or as an external consultant, while I understand the basis that it is based on industry average, but what items are included in this? Don't you so you see, I need a breakup to understand what things are inside this 22.6. We need more visibility, more breakup, more clarity because it is a very substantial amount. In fact, it is the biggest amount on the entire thing after revenue, right? So Do you understand my concern that, to be, I want to find out what is the breakup of this, what items are included. Otherwise, I will not be able to assess whether it is realistic or not. So we'll just ask for some more information. What will be your, please draft your opening sentence. Very simple. The initial investment of 22.6 million is based on average of 5 companies. That's your opening sentence. But then you will say that what are the items included? What is the breakup? More details are required to assess the accuracy of the amount. Please draft on your own while I will enjoy my life. Start with an opening sentence that initial investment is based on industry average. However, no breakup is provided. What are the items included? Without the breakup, the adequacy of the amount cannot be reviewed or assessed. Simple language. The initial investment of 22 million is based on average of 5 companies. However, no details are provided. I would like to see the breakup of the items in order to assess whether this amount is realistic or not. Alas, this is how actually I talk in my company when I see these things that I need the breakups. Otherwise, how can I sign off? Breakup or details. That's it. No other comment. Heading is initial investment. No mass. Then no need. Then you have to just see whether it is adequate or realistic or not. All right. What else is there? So, what is this 3.6 million inflow? Let's look at note number 6. It's an inflow. So that's very strange. So it is estimated realizable value of the non-current assets at the end of investment appraisal time frame. Oh my God, what are these guys doing? Do you understand this? They are saying that it is the estimated realizable value of the assets. They are showing it as an inflow, which means that they will sell off the assets. It's the scrap value, right? So it seems like that they will sell off the assets and this will be the sale proceeds or the scrap value. So do you understand this stuff? Do you understand this first? That how is this an inflow? So it looks like that it is the estimated realizable value. Realizable value is sale proceeds. So it looks like they will sell off in technical language. This is called terminal value. In technical language, this is called terminal value. What is it called? Please write everybody. Terminal value. All right. This is the technical language. So terminal value is that when you sell off everything and you receive the sale proceeds, that's called terminal value. It is always inflow. It is always at the end of the period and it is an inflow. So initial investment will be in the start, है ना? Initial investment will be in the start, which is year 0, and terminal value will be in the last year when you will sell off everything. Now, the important thing is terminal value is considered, or terminal value is only included when you terminate the project, when you wind up the project, when you shut down the business, you sell off your assets and include the sale proceeds. Is that clear? I repeat, terminal value is only included when you shut down the product or shut down the project. Then only you can sell off the assets, right? If the product is running or ongoing, how can you sell off the assets? Not possible. So terminal value is only considered when the project is wind up and you sell off the assets. So now, if these guys are including terminal value, it is telling me that they intend to shut down the project, shut down the computer games, and sell off. What do you think? Whenever someone includes net realizable value at the end of the period or terminal value, it automatically means that now you are shutting down the product and winding up. And this means winding up. So now, as a consultant, I have doubts. I don't think there is any plan to shut down computer games. I don't think so. It was mentioned somewhere that these guys are diversifying into computer games because that industry is growing and they have a long-term plan. They are actually, so how can, so there is a disconnect somewhere. I think that this should not be there. So if their plan is to continue, if their plan is to continue and grow, then this should not be there because this means that you are winding up, right? So there is some mistake somewhere. Done. So now what? I just need a simple paragraph. Your opening sentence would be that you have included 3.6 million as the net realizable value. This means that you plan to wind up the computer game product in year 5. I don't think this is correct because your intention is to continue, right? Khalas. Please try and draft something very simple, not elaborative, just touch and go. Keyword is wind up versus continued operations. Try. Take your time. No worries. Okay, let me do. Fatumata, you are saying this indicates that they are selling? No, not they. You are selling. You're writing to the finance director, right? Fazal, don't use bullet point. Daniel, it's a bit short. Satyajit, bit short. Incomplete, actually. Sujal, don't use words like I don't know why. It sounds unprofessional. You can say it seems unrealistic or incorrect. All right, looks good, guys. Ibrahim, incomplete. Where is the word wind up in your answer? Salman, where is your opening sentence? And Salman, you are actually recommending things. Recommendation is not required. Please be focused. Just identify the problem. All right, guys, is it now do you think the drafting is getting slightly easier for you once you get the hang of it? है ना? The more you will solve questions, the more you will do drafting, it will get easier and faster as well. Because sometimes points are repeated. Good. Okay. What else is there? Now let's talk about discount factor. Hmm? Note number 7. Discount factor is NT's weighted average cost of capital. So this percentage, whatever they have used, is they have used the weighted average cost of capital. Now, do you understand these concepts? Weighted average cost of capital or cost of cost of debt, cost of equity, weighted average. Do you understand these concepts? Okay, let me simplify it for you because some students are not from ACCA background. They came from university background. Now, just see the art of simplifying stuff. Because when I talk to the board, they're all non-finance. So I have to use layman language and simplify stuff for them. So I will try to explain this concept in very layman simplified. So whenever we invest in any project, for example, this project requires an investment of how much? 22.6 million, right? So whenever we invest in any project, so the question is, how do we arrange those funds? How do we finance the project? So in this case, these guys require 22.6 million. So from where they will arrange this money? That's the question. Now, there are three options for financing. The first option is these guys can take a loan or debt. Okay. They can take a loan or debt from the bank. So this is called debt financing. Whenever you take a loan, it is called debt financing. So if the project is financed through a loan, then the discount factor should be used, should be based using cost of debt. What did I write? Cost of debt. Please type. If the project is financed through a loan or a debt, then the discount factor should be based on cost of debt. Very good. Why we are using cost of debt? Because we are financing the project through a loan or a debt. So whatever is the cost of that loan, so cost of debt. Clear? Yes or no? Done. Very smart, guys. The second option is that we can finance through our own funds, equity. Okay, if we don't take a loan because we have the funds, we have the liquidity, so it means that we are financing from our own funds, then it is called equity financing. Or we are raising equity, we are launching some shares, whatever. So if the project is financed through equity, then we will take cost of equity. Then the discount factor should be based on cost of equity. Please write cost of equity. If the project is financed through equity, then discount factor should be based on cost of equity. Very good, very smart, very intelligent. You see, your bookish knowledge is very good, but your practical knowledge sucks. And this is my job as a teacher to give you that practical way of thinking and orientation. I don't blame you because, but this is the business side which I want to teach you. Good. The third possibility, the third possibility of financing can be you can use a mix of equity and debt. है ना? It is also possible that if you want this 22 million, you can use a mix, some portion loan, some portion equity. So when you use a combination of equity and debt, then the discount factor should be based on weighted average cost of capital, WACC, WACC. Why weighted average cost? Because we are using a combination of debt financing and equity financing. So there are three possible scenarios. For debt financing, we will use cost of debt. For equity financing, we will use cost of equity. And for a mix or combination financing, we will use weighted average cost of capital or WACC. Is this clear? Very good. Now, what are these guys using? Note number 7. Discount factor is NT's weighted average cost of capital. They are using WACC, which means what? Which means that they are going to finance this project through a mix or through a combination of equity and debt. है ना? It means this. If they are using WACC, it means that they are using a combination of equity and debt. Now, how do you know this is correct? So maybe I would like to ask the finance director that can you please confirm because you are using VAC? Can you? I would like to confirm with you whether the project is being financed through a combination because you guys are using VAC. Yes, sir. If they are using VAC, so as an external consultant, I would like to reconfirm this from the finance director. Do you understand what I'm saying? Why I need to confirm? Because if they are using debt financing and they used VAC, it is wrong. है ना? Why I need to confirm? Because if they are using debt financing and they are using VAC, that's wrong. So it's better that if they are using VAC, I would like to confirm the source of financing in order. So let me simplify it. I would like to confirm the source of financing in order to assess whether weighted average cost of capital is an accurate basis for discount factor. है ना? There is one more thing. When we talk about discount factor, so discount factor includes two things. Number one, the cost of financing and check whether business risk factor has been included or not. What is a business risk factor? So any new project, any new product, any new initiative or venture, the risks will be high, right? We are doing it for the first time. We might not have the experience or whatever. Anything new, the inherent risk or the chances of business failure will be a bit higher. Agreed? So then the discount factor should also include a component for business risk because it's a new product. But who the hell is this Muhammad? Don't sound accountant, please. People are writing KE, KA, beta acid. For God's sake, would you talk like this to the board? Don't show off. I know you are an expert in the subject matter. All right, no worries. So now discount factor always should have two components. The first one will be the cost of financing, either cost of debt, cost of equity, or VAT. Plus, if it is a new venture or a new product or a new industry, then there should also be a factor or a percentage for business risk. Have these guys included business risk? It's just saying discount factor is weighted average cost of capital, full stop. What about business risks? No, right? So I will flag all these things. All right, guys. Now you try and draft. Your opening sentence will be discount factor is based on VAT. And then you can say, I would like to confirm the source of financing in order to assess the adequacy of this. Also, the discount factor does not include business risk factor. That's it. Please try and draft. No, Vasif. No. Aisha, please don't talk about inflation. Okay. Aisha, no, the assumption has been, you are saying no assumptions are given. It's there. It is saying weighted average cost of capital. That's good enough. And don't talk about inflation. Huh? Fatumata, I like your drafting. But Fatumata, you are saying, I think the finance director should confirm. That's wrong. Your report is addressed to the finance director. No? So you will say, I think you should confirm. You will lose communication skills mark. You need to keep the addressee in mind. Okay, Fatu? Who's this guy? Abhimanyu. Very good, man. Very specific, very to the point. I like it. I'll just copy Abhimanyu's point in my draft rather than typing from scratch. The discount factor of 7% is based on WACC. That is the opening sentence. I would like to confirm whether the proposal is to be funded with a mix of debt and equity, because using WACC is wrong if it is funded solely through debt or equity. Good. I would also like to know whether businesses is included in the WACC, as this is a new industry. Very good. Excellent. It's a bit lengthy, but okay. Let me simplify it. Okay, yes. Okay, Salman. Now, these are 2 points I don't know because this one is very short. Maybe 1.5 points. You can merge them or you can separate them. Doesn't matter, but as long as you include it, it's all right. 10 more seconds to share your draft. Done. I think we are done. We have already have much more points. We require 9 points. So already we have more than 9 points. But I wanted to cover the point so that you understand how to look at things. Any questions on this task? Are you now clear? So the thing is, this checklist is very important. Do you agree? The whole game is on this checklist. So you will need to memorize this, but it's not very complicated. If you do 2 or 3 more questions on financial projections, it will automatically be memorized. Okay. Now, do you think this drafting class was helpful, especially the self-study students? The SBL is all about drafting. It's not about your theoretical knowledge. It's all about how you pick the point and how you elaborate on it. So if you think that this drafting session was helpful, then you can consider joining my revision batch starting from 5th. Those of you who have not yet enrolled or thinking of enrolling or doing self study, I would strongly suggest that you must consider joining the revision batch because the paper is very expensive. So don't take risks on your own. I will share the schedule, but right now I need a break. Can we have a small break, please? Okay, so it is 8:35. It is 8:35 and I 15-minute break. 8:35 to 8:50 p.m. Dubai. So just calculate 15 minutes based on your local time, and I will see you in 15 minutes to complete the rest of the webinar. All right, guys, can we start? All right, so let's now try to summarize things. So, as you heard from the global prize winners, that in the last 4 weeks, just revise the important topics and not the entire syllabus. So, what are those list of important models and list of important topics which you should memorize and master? So this is the list of important models. Okay. So pastel, Porter 5, strategic position, SFA framework, SWOT, corporate parenting, Ansoff, Harmon, Mandelo, cultural, change model, and risk mit. Where will you find the summarized notes and summarized explanations? You can use my top 25 video. It's available on YouTube. And you can use my top 25 summarized handout. I can guarantee you that if you know these models, then you will be able to handle any paper. Okay. And then other than the model, these are the list of 15 topics. So 10 models, 15 topics, total 25. So you just focus on these topics and those 10 models. 99% you don't need anything else. Is this clear? All right. Now, just I wanted to recap some important things to refresh your memory. So, yesterday we discussed exam techniques. So, under time management, the first 10 minutes you will spend on reading and planning. And the important thing in that 10 minutes is you will decide the sequence of your answers. Always start with the easier question first, difficult topics in the last. For drafting, how many minutes per mark did I teach you? Let me test your memory. Drafting, how many minutes per mark? 1.8 minutes per mark. Okay. As soon as the allowed time is up, you must leave that answer. Just complete that one paragraph you were in the middle of drafting, and you must move to the next question. Very important. The global prize winners use the word rigorous time management. This is what rigorous means, that you have to uh, beat yourself in order to leave something incomplete and move on. It's not easy, but you have to adopt that discipline. Linking with the exhibit. So the only way you can link is always start your answer with a statement of fact. Like you just saw a few minutes back, how I was just picking one liner from the scenario and then explain the point in 2 or 3 lines maximum. Okay. Number of points. How many marks? How do we decide number of points? We 1 point is worth how much? 2 marks. Exactly. So if it is a 10-mark question, we divide by 2. So we require 5 points. If we are not able to give 5 points, then at least 4 points, which is formula is -1. If number of slides is given, like if the question says prepare 2 presentation slides, then first you will calculate marks per slide and then you will discalculate the number of points per slide. Clear? Format of your answer, again the same thing, paragraph style of drafting, leave one line between each paragraph, try to give subheadings, common sense question. The best strategy is to think like a CFO, what you would have done if you were there in that situation, and pause for 30 seconds before you start drafting. Gather your logical points mentally, and then you start drafting. And bouncer question, I mean, this is the most difficult question of your paper. Do it in the last. Do not consume the entire allowed time. Save 10 minutes from here and go back and add more points to your earlier tasks. Any questions on exam techniques? We discussed all this in detail yesterday, but I just wanted to refresh your memory because we will be applying all these techniques from Tuesday onward. Formats, yeah, we are aware of the formats, so doesn't matter. Professional skills. Evaluation skill. What are we supposed to demonstrate in evaluation? How can we score evaluation? Let me know. Evaluation means include both pros and cons. Doesn't have to be equal. It depends on the information available, but you have to cover both positive and negative points. Analysis skills. What is analysis skills? Quick, quick, quick. You identify the reason, the root cause, the issue. Very nice. Very good. Communication skill, what you need to focus on? You need to keep your role in mind, whether you are internal or external. You need to keep in mind who you are writing to and the overall format, the professional look, the drafting tone, but mainly your role and whom you are writing to so that your language is aligned. Commercial acumen, what you need to do? Nothing, just you talk about non-finance things like industry knowledge, marketing, HR, IT. It is again everything will be given in the exhibit. So if you follow the exhibit, automatically your answer will be aligned to commercial acumen, right? And skepticism, we just did skepticism in today's class, that you will adopt a questioning tone, a challenging tone. You can disagree. You can say it's inaccurate. You can ask questions. You can ask for more details and breakups. You can ask for more clarification, anything. Any questions on professional skills? Are we all clear? Good, good. Now the study plan for September 2025. So I have prepared two study plans. One is for my paid batch, those students who are already enrolled or you are planning to enroll for my 5th August classes. This plan is for you. And I've prepared a similar study plan for self-study students as well. That if you don't plan to take any of the classes, then you can follow that plan. And both the plans are quite similar, right? So for my paid batch, existing plus new enrollments happening for. So the first thing is now master top 25 topics video and memorize top 25 topic notes. You see the list of top 25 I showed you a few minutes back. You must know all these 25 topics by heart. If you know these topics, you will be able to handle any kind of question. Then memorize the list of impact. So for my paid batch, I have shared a list of impacts, right? So because SBL is all about impacts, if you memorize the most frequent, most repetitive impacts, then you don't have to think in the exam. You can immediately reproduce the impact. All right. Then watch this September webinar, which we just did. You can look at it for revising exam techniques, professional skills, and format. And you must attend the revision and drafting classes starting from 5th. I will share the schedule in just a couple of minutes. Attending the classes is mandatory if you want to learn and improve. Because you just saw that SBL is all about drafting and practicing. So this revision class is about drafting and practice. So please don't miss these classes. We will do mocks and then you will attend the pre-scene workshop and the grand revision. This is also part of your package. Please do not attempt any extra question or revision kit or study hub on your own, because the questions in the kit and the hub are not good questions and their answers are more confusing. So you don't want to shatter your confidence at the last minute. SBL is about understanding the technique. As long as you understand the technique, scenarios will change, case studies will change, but the technique will always be consistent. Exactly same plan for the self-study students, because I have shared the study plan of my paid students with you. But the only difference is you will not be there in the classes. So you will need to do these questions on your own. I will be doing these questions in my live class, but you can, if you don't want to join them, no problem. Then you should also do these questions so that you are aligned. Stay away from books, kids. Yeah, I already explained that. So some people were inquiring about my revision classes. It is starting from 5th of August. Okay. And it includes full drafting. It also includes pre-scene discussion and grand revision. Everything is there, the price and the inquiry numbers are there. You can take a screenshot and you can enroll. What is the schedule? This is the schedule. The one which I shared yesterday had some issues with the date. It was some error in the formula. This is the updated scheduled classes will be held in the evening after office hours. 2 days class, 1 day off. 2 days class, 1 day off. That's the cycle. So we will be doing three case studies in detail. It's not working. Why is it not working? We will be doing three case studies in detail, and after that, we will be doing four mock exams. And then after that, it will be a 2 day workshop on the pre-scene. Very, very important that you understand your pre-scene. All classes will be recorded and will be available the next morning for people who have missed or you are in a different time zone. Recording will be available the next morning. Okay. If you don't want to enroll in any of the batch, but if you want to do self study, that's fine. But still, I would suggest that you consider enrolling in my pre scene workshop because you need to get a good grip on the pre scene, right? So you can separately also enroll for pre scene if you don't want to attend the practice classes. These are the contact details. Take a screenshot for any inquiries. And if you have any doubts, you have my WhatsApp number. You can call, not call me, please don't call me, but you can reach to me anytime. Now, this is the most important thing when you go for your exam. Dress like a CFO, feel like a CFO, and think like a CFO because you are future CFOs, right? So when you go, dress formally. People will laugh at you, but dress formally like you are going for a formal interview. Believe me or not, if you dress formally for SBL during the exam, it will boost your confidence. You will feel like a leader, and your mind will start working like a leader and will differentiate you from all the other idiot students. This has worked, this is tried and tested. All my high scorers have done this, honestly, done this. Formal dress, formal clothes, right? Up to you guys. So I wish you all the best. Thank you so much for attending the webinar. It was a great experience for me. So now I will open the floor for questions. I will spend few minutes on questions. Any questions you need to type now. Will you share the answers that we drafted in the class today? Um, okay, in my paid batch, yes, that's not a problem. Pre-scene slide. What is pre-scene slide? Want to see the pre-scene slide? Okay. Do we need to watch top 25 if we have already watched all the lectures in LMS? Absolutely, yes. Now forget the LMS. For revision, for memorizing, use top 25. Okay. Which mock will I be evaluated? Smartware. When can I get access? As soon as you pay, they will give you access. Should we do questions from practice platform? No. If you are enrolled with me, then no, we will do practice together. But if you are self-study, then go ahead. Where can we get the impact list? The impact list is on my paid group, but I will share it in the global group along with handout of webinars. Talal, now it's too late because I will not have the time to review them. Revision timing 6 p.m. to 10 p.m. Dubai time. You calculate your own local time accordingly. Yes, Faz, absolutely. And I will guide you on this once the classes start. Contact details, here's the slide. Financial projections, we will do a lot of questions on financial projections in the paid batch. Don't worry. There is a separate session, extra class for financial projections. Impact list, I will share on the global WhatsApp group after the class. 4 mocks will not be marked, only 1 mock will be marked. For the rest of the 3, I will discuss the answers and I will share the drafted answer for comparison purposes. Yes, the pre-scene workshop is included in the revision batch. So see, revision batch is, let's say, $110. And it includes the pre-scene workshop as well. If you buy pre-scene separately, it is $40. So just by paying the difference, $60 or $70, you get access to all the drafting classes. So it's a good deal. Global group link. Where? How can I send? Okay, let me send the global group link. Okay, wait, huh? Let me share the global group link. Um, I will share the global group link right now on the Zoom chat. Okay. Give me a second. Let me pull it out. Okay. Control C. How do I paste it? Chat. Not direct, Baba. I want to message to everyone. Okay. So I've just shared the global group link on the chat, meeting chat. Those of you who are not part of the global group, please join it because I will be sharing all these material in this global group as well as paid groups as well. Yes, Jalal. Yes, Abdullah. Huh? I cannot reschedule, Abdullah. You will need to watch the recording. All right, guys. So I guess all done. So thank you so much for joining. If you have any doubts, message me and I will respond. Okay. So till then, guys, take care and good night. Those of you who are enrolling in my revision batch, you need to revise the top 25 before you join. And you need to revise the list of impact before you join. And you need to watch this webinar for exam techniques before you join because we will be starting right away from paper solving. All right. Thank you so much, guys. Take care and bye bye.